is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richey. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody, and you heard that. Gold, man. We got gold, we got silver. Silver up by $2.86. Don't kick off the program with silver often. Maybe we should more often. It warrants it lately. How about it, man? Silver up by another 4.2%, $71.43. The rally ain't over yet, man. We got some selling this morning. We'll get into the GDP numbers that you get out this morning. Talking about 4.3% in the third quarter. Very delayed numbers. Okay, ordinarily, we would have gotten the first reading of GDP, I believe at the end of October. We would have gotten the second reading of GDP November 26th. We're a month after that, right? So we're a month after the second reading. Super delayed data, but nonetheless, it was strong data at 4.3%. We'll talk about some of that, but that's where you had some volatility this morning, where you had the dollar strengthen on some higher yields. Okay, silver pulls back. We're higher than we were then. Remarkable. Gold, up $51, up 1.1% right now. There was your drive lower, and we get it all back, man. And check out the volume. Okay, we're going to do some volume Friday in the market, but it's a decent day. Check out gold. You're going to have the highest volume we've had since December 12th, and you're going to have probably the second highest volume day so far this month outside of that one day there. So we're climbing. We're doing it on higher volume on gold. You jump over to silver right now. Right, silver. Now, there's your 12th. Okay, when you back lower the high volume day, you have a spike here for silver on December 17th. This is a daily we're looking at. And today you're going to make a run for that. 145,000 contracts on the 17th. And we're trading at 123,000 contracts right now. So we'll see as we make a run towards the end of the day. We jump over to platinum. Look at this. Did we do it? What's the number? Oh, look at this, folks. So we got $3. We might hit it as I finish this sentence. Come on. 2308. Let's go. We're at 2305. Look at this. Now, folks, this chart has nothing like the parabolic run we just had. Okay? When you go back to the last time we hit this price point in platinum, and we're going to hit it, man. We're at 2306. Look at this. Come on. Let's go, platinum. Platinum's so strong. 10.4%. Okay? Now, the last time we hit this price level, you traded. Now, look at this time, this year alone, platinum, man. Platinum was at 1,000 in May. We're at 2,300. Here we go, 2,307. We got to ring the bell now. Come on. I half kid, right? I half kid. But look how long the last time it made this run. So even when it hit it the last time, it took 2.5 years. This is just a straight shot to higher price, man. Okay, but platinum up another 10.4% today. Metals, copper. Yeah, the dollar is extremely weak right now, and that's what you're seeing across the board. You know, I had a great conversation with our man Steve Rhodes yesterday. He loves to pull up those charts of gold and a variety of currencies. Gold is trading at all-time highs almost across the board right now. Okay, so it's not just the dollar, but you better believe the dollar's helping all these. Okay, the dollar's breaking away, man. Even on a day where we have a high GDP, you have yields pressuring to the upside, the dollar is weak. Okay, now, yeah, we recoiled, but we have higher yield from where we were at 8:30 this morning, right? At 8:30 this morning, the 10-year was at 112.15. We're lower by 5 ticks. You got a little bit of higher yield over that period of time. And you're looking at 4.17 right now on the 10-year. You jump over the 2-year, and there's your drop there as well. Yeah. And yes, okay, it's important data. Even if it's lagging, And there's the number, okay? Consumers power strongest U.S. economic growth in 2 years. Now, like I was talking about this morning, imports have something to do with this, okay? How large? Anybody's guess, especially when it's this old data. But the reason why the Q1 data was so abysmal is because the imports surged, right? Everybody got ahead of the April 7th tariff liberation day. Okay, they all imported everything they could import as humanly possible. In that first quarter, imports subtract from GDP. So now what's happened is that naturally you'll have less imports. Not even talking about the tariffs, just the pull forward of those imports is going to be less imports detracting from the GDP. Now, this data, as I mentioned, though, very, very delayed. Now, you get into the wages, okay? Not wages, excuse me, consumer prices. And this one, the personal consumption expenditure was higher to the tune of pushing almost 3%. So that's part of it as well. You know, if inflation is sticky and the economy's growing at 4%, then why are we cutting? I don't think the economy's growing at 4%, okay? Do you really believe that number in the first quarter? Do you think the economy was tanking in the first quarter? If you're a fan of the president right now, then don't believe the 4%, okay? Because if you believe the economy was not tanking in the first quarter, then it was just a reflection of the pull forward of imports, and that's part of it. The other side of that is it's a beat, man. The economy is doing well, and even if you average it out, you're still talking about growth of about 2.6%, 2.5, 2.6, if you look at the entirety of Q1, Q2, Q3, right? If you say, okay, there's been some volatility with tariffs, but yeah, this dollar, man, weak. We're down almost a full point from where we were on Friday, 97.95. We jump over the VIX. I have to almost chuckle. No one's here that wants to buy premium in this market, which means it's just going higher right now. The VIX hits 1364. Okay, we were just trading at 18 4 trading days ago. We're at 1385. And for those of you keeping score at home, as they would say, that's a yearly low. Okay? So the VIX has not been at this price level all year, folks. Yeah, and there's your volatility around tariffs. You spiked to 60. We had some November volatility when the market pulls back. That's, of course, correlating to this pullback here. But right now, folks, okay, and we'll talk to our man Basil Chapman coming up, and we'll talk to our man Tim Ward. But, yeah, that VIX saying you got nothing to worry about, at least until we return from Christmas or the holidays. Jump around some of the equities that are not trading higher today. It seems like anytime the market goes up, Walmart is the inverse of that. They're the ultimate safety play right now. And so when the market goes up and nobody cares about safety and it's a risk-on day, Walmart pulls back. Walmart down by 1.3% right now. Apple has been behaving almost in a similar fashion. Today, though, they're in the positive by 0.4%. Oracle under pressure, off by 1.9%. Jump over to Coinbase, under pressure with Bitcoin. Coinbase down another 3% right now. MicroStrategy off another 4.3% right now. Be careful in those ones, folks. Watch out. We jump around to some of those growth stocks, though. NVIDIA, how about it? 2.8% to the upside. Microsoft, 0.5%. Google, up by 1.6%. Stay tuned, folks. We're coming back with Basil Chapman. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got S&Ps up by 30 points, sitting at record prices right now. Metals to the moon. And to talk about all the action, folks, we're going to jump over to our man Basil Chapman. You can check out Basil's outstanding program, the Tiger Technicians Hour, folks, every market day, 10 a.m. till 11 a.m. Eastern Time. And don't forget about the opening call. Now, right on the front page of TFNN, folks, Basil did his subscriber webinar a week ago. You got some time during the holidays. All subscribers to the opening call gain access to the archive, so you can head on over to the front page, check out the opening call. You can sign up, whether it's a month, 6 months, a year, a month at $149. You can add savings for the 6 months and the year. They all come with a 30-day money-back guarantee, and you'll gain access to that archive webinar right when you sign up for that subscriber page. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic, man. How about yourself?
Very well, thank you.
Good. So we got this market's not stopping just yet, Basil. They got green across the board. What do you think, man? We got quite a market coming into the end of the year.
Well, it's interesting that you say that, because not everything is participating. And if you remember about 2-3 months ago, I said I think we're starting to see a transition, that some of the real winners of 2025 are starting to slow down and pull back. But what's fascinating is that the Dow is still holding very well. I'm seeing that the IWM, the Russell 2000, is finally going to head towards all-time highs. But most importantly, there's been a rollover, and all those oldies, it sounds like a 1980s market right now. Alcoa, I mean,
Oh, did I lose you, Basil? Are you there? Did we lose him, Al? I think your mic got muted, Basil. Maybe? Look at Alcoa while Basil's talking. We'll get him back on. Look at this thing. Folks, check out the opening call. All right, this gives me a few minutes to plug Basil. Not a few minutes, a few seconds. We'll get him right back on here. But check out that run. Basil's had some great calls, folks. You gain access to all the archive webinars. Look at that thing, man. There's your daily. You check out the weekly. Yeah, look at this roller coaster. Wow. Yeah, we're coming into the highs of 2023 there. Some of the others Basil's looked at. This running GM, right? At $30 a couple years ago, we're pushing 82 GM on a monthly. My goodness. Let's check out the weekly. 82.81 right now. GM down by 0.25%. right. And Basil, I see your screen, but we can't hear you.
Okay, just
there we go. Can you hear me, Basil?
I can hear you. Yes.
Okay, we have you now. Not sure what happened. Go for it. Thank you.
So now we've got limited time. So let me explain what I'm looking at. So there was a rotation into those old stocks, the names that go back decades and decades. Alcoa. So I like the action of Alcoa. I drew, for those who are interested in my work, I show this to subscribers where I use a cup formation. I use the left side, right side price to measure the move that could come back to where it was. We went along at 43.60, and today it's at 53, and that was just a couple of weeks ago. I spoke about General Motors. General Motors, come on. General Motors is looking terrible. Now look at General Motors, all-time high yesterday at 82. It's at 82.81, and we went along at 71.17 a couple of weeks ago. And these are the old guys. General Electric. I mean, General Electric, we are still long from the 198 level. Here it is at 316. So this is very unusual. There's been a complete rotation into what I think is very important for 2026, and that is we go into what I call the deep cyclicals. This is the real economy. When you start to see these stocks move, it's really very important because tremendous capital goes into just the constructing whatever these instruments are, Alcoa, aluminum. I mean, takes a lot of equity and a lot of investment. So I like this very much. We also did something a little unusual. We went into, I liked Rocket Lab. And actually, I'm not sure. Can you hear me?
Yes, we got you loud and clear, Basil.
Oh, okay, good. So we went along a couple of weeks ago at 48.70, made an all-time high in leg C in the daily. Look at this. The monthly chart broke to an all-time high, and all the technicals are still very well. This is aerospace, manufacturing, end-to-end solutions, RKLB. I think there's been something that's going on in this particular point that is very unusual, and you can speak to that unusual. We are still long our gold position. We've got a small position left. We've been taking a little bit off, but here it is at all-time highs. And I don't see, I did this on my show today, I don't see anything technically. It'll have to come from an outside source that really knocks the metals down, because look how strong all the 9-period over the 14 in the daily. But look at the weekly chart breaking out with, look at that green 9-period over the 14-period moving average. The MACD is good, stochastics at 86%, and the monthly is good, and the same with silver. We still have our silver stock. And so...
How about that monthly on the silver, Basil? What do you think about that one?
that is unbelievable. And I drew this in. I couldn't believe it when I drew it a long time ago. I said, I'm going back to, where was it? It was going back to 2012, where this silver was here in the 43s. And look at this. So so something unusual is happening in the sense that we've had the formality of having overbought stocks that did very, very well, like some of the AI stocks, some of which we still actually own. And then all of a sudden, you got money coming out of something that was absolutely spectacular, like a Bitcoin. I've been saying we still have our Bitcoin from much lower down. But this, as something starts to move up, you always find something else that's taking a breather. So I'm watching this. This is Bitcoin. Look on the monthly chart, really important on the Chapman inside track support level. So all in all, I think the rotation is going on, and now we're seeing some of those, as I say, deep cyclicals that are very important, like an Alcoa, like a General Electric, and even the bank stocks. I just wanted to show you this chart. I've shown it to you a couple of times, but look how it's important to see that this month it broke out. Look at this. This is just the two charts here. One chart with two positions. XLF, this is the monthly chart of the S&P Select Financial ETF, pink, and the blue is the S&P Spider. Look how it's coincided with each one of those tops and bottoms. I couldn't find a chart more accurate in terms of coinciding with the S&P than this.
No divergence there, right? Not even close.
And the S&P Select Financial ETF is making it all-time high. Together with those cyclicals that I was talking about, I think this is very positive. And then the final thing I wanted to mention to you is in the Chapman wave, we're always, if you get a buy signal, always looking for a buy mode confirmation, and that says you should go to at least, or not you, but whatever you're following should go to 4 higher peaks. Well, this is only a leg A in the Dow. Oof. That means you can't get a D, the 4th highest peak, at the earliest mid-summer. So that's the.
I have to laugh just because I love it, because I look at those charts and I laugh to myself, Basil, right? Because it's just been there's been no pullback at all. I agree. Where would you find a monthly pullback, man? We have not hit a pullback on a monthly every single month.
Could have it, right? But look at this weekly chart of the Dow.
Oh, okay.
Beautiful. Yeah. So anyway, I'm still very positive, and we'll see what happens by the end of the year next week.
Basil, thank you so much for the education, the information, for all the hard work you do for us, for the subscribers. Folks, check it out on the front page of TFNN. And remember, the outlook for 2026 and what looks good going into the new year. Basil, have a great one, man. Look forward to the show tomorrow.
Thank you very much, and a Merry Christmas.
Merry Christmas. Take care. We'll come right back, folks.
Commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks, and we got the S&Ps right now just chopping around at 69.60. You did have platinum hit those highs. We rung that bell. 23.18, first time ever. Got above those highs from 2008, and we got gold right now up $51. To talk about the markets and metals, folks, we're going to jump over to our man Tim Ord. You can reach Tim at his website every trading day, ord-oracle.com. We talk to Tim every Tuesday and Thursday at 3:30 p.m. Eastern Time. Put that one on your calendar. And if you got a little time during the holiday season, you want to check out some of Tim's great webinars, right at TFNN.com. You head to the Services tab, folks. The Secret Science of Market Tops, how to identify market tops, and the 6 secret ratios every trader should know. And you can check out some of those ratios right there. You buy that webinar, folks. It's on your members page forever. You watch it as many times as you like. Tim Ord. We got the VIX at 1385. Good afternoon, Tim.
Good afternoon. That was it's way low, so that's seen any signs of a top. We've been talking. Actually, this is chart 1. We've been talking about this SPX VIX ratio for I don't know last couple of weeks, whatever, or 2 weeks. But yeah, we're hitting new highs here on the VIX or on the SPX VIX ratio above highs back here. Only problem with what's going on right now. Anyhow, let's get back what this is. This window right here is the SPX VIX ratio, and it kind of leads the SPX. So if this ratio is not hitting new higher highs like here, where the S&P was hitting higher highs, that's usually a bearish sign. You get a pullback, which happened here. But basically, since this is October. The ratio's pretty much making higher highs. Made a higher high there, minor pullback. Now we're still making higher highs. So as long as this ratio keeps making higher highs, the SPX at some point is going to make higher highs, and we're actually hitting new highs right now as we're talking. So
let me ask you real quick, because you always break this down. I think you often, of course, when we get these moves in the VIX, but when you look at, so we're at the lowest level that the VIX has been at all year, right? Which is remarkable when you look at it. And the market's had a heck of a year for a VIX where we haven't seen these levels. Does that mean, I'm sitting here saying, my goodness, right? The market has proceeded higher, and now we actually have less volatility. Just pretty remarkable that we're at actually lows when, man, this market's been a great market. And even with positive action, and so what does that say? It just points to higher prices until that turns around, right? As the charts say?
Right. That's pretty much what starts say. Here's kind of a drawback. You see this area right here?
Yes.
Anyhow, the VIX is above the upper Bollinger Band, and it can stay there for a little bit. Because that's probably about a week or so, and it's kind of hard to see it, but we're right above the upper Bollinger Band.
Yeah.
So you might see a consolidation, but the pullback market does pull back a little bit. I think most of the volatility to the downsides is kind of done, because we kind of had a slap in the face in October. We had another slap in the face in November, and we're up in here. And this is usually not a high volatility time going into actually December, January. Most of that's probably over, but most likely, I think even though we're hitting new highs on the SPY, the volume's not really matching. I'm not bearish here. I think the market's pretty much just going to hold its level, if not move higher. But it may stall in this vicinity here. That's what I'm kind of looking at. But the monthlies, I wish I had that on. But the monthlies, SPX VIX ratio is also hitting a higher high, new high. That's on a monthly time frame, and the monthlies rule the weeklies, the weekly rule the dailies. But I think we're probably, maybe not this week, because we got tomorrow. I think it's a half a day. Then Christmas is Thursday, Friday. It's going to be a nothing day. So you might see a pullback, possibly starting, if not late this week, maybe next week, but nothing real significant to the downside, because the VIX is pretty much, if you got VIX hitting new lows for the year, that's not a bearish sign at all. But you can see a minor pullback here, but I'm not trading it. I'm probably going to stay long unless something weird starts to happen. But if the market does pull back and we go up again, and we don't hit a new high on the SPX ratio, it's time to look out for that. So that would be but that hasn't occurred yet. So that's not even on the drawing board as yet. But it's I don't know. It's bullish. You don't want to short here, especially with the VIX hitting a new low. But yeah, you're right. It's bullish.
Because let me ask you this. Is it a good way to think about it for those listeners out here? Because I've lived with the VIX for a while, but it's pretty cool mentality-wise where you say to yourself, okay, nobody's paying up for premium or insurance whatsoever because nobody's even thinking about selling in this market. I mean, that's how I think about that mentality. Does that jive with the way you think about it at all on that VIX?
Well, the VIX is actually it actually measures the premiums on puts and calls, and so it's it's not a commercial thing where the commercials are in this. This is a public thing. These are puts. Okay. I guess commercials can be in the put and call business, but basically the public's in the put call business. So the premiums are actually very, very low. When the premiums are high, that's usually when you got high volatility. When premiums are high, in other words, premiums started going high here because this ratio is going down. That means the premiums on puts and calls was going up. So that would suggest that since the premiums are going up, they're hedging on, in other words, they're selling calls against their long positions per se.
Okay.
Am I making sense?
Probably not. For sure. No, I kind of, but always walking through it because I know you understand it so well, and I understand it too, but there's so many listeners, I think, that they see that number, but just like you're talking about. So they're paying less, folks, for those premiums. And so, they don't expect the movement to warrant the premium, right? So there's.
Right. So right now they're put it this way: if you got a VIX hitting new lows, you can't be bearish. So
can I ask you that on an absolute level? Because I find myself saying, okay, we're at 1387. How low can this thing really go? Now, it can go a lot lower. I mean, you just back it up to last year, and I have a 10 on here. It was at 11 or 12 for a while. But do you ever, because I love the ratios, and check out the webinar, folks, on the front page, TFNN under the services tab. He talks about 6 of them, the ratios. But do you ever look at the absolute? Because I look at it and I say, all right, man, we're at 1386. How low are we going to go here? Because really, you start approaching a 12 handle, and man, we're really talking about a low number. Do you look at that absolute number or just the ratios?
No, I kind of look at the ratios because whoops, the music came on already. So
yeah, we're flying, folks. That's all right. We're going to come back with Tim. We'll talk about some of that. We'll finish this conversation on the ratios. And as I mentioned, folks, one of those webinars talks about these ratios. Check it out on the front page. We're coming back with Tim. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps up 30 points. We're not really moving right now as we sail into the closing bell right now. Half day tomorrow. We're talking with our man Tim Mord. And don't forget, folks, we're talking about some of these ratios. You can head on over the front page of TFNN, the 6 secret ratios, as well as his other webinar and his website, ord-oracle.com. And I appreciate the answers, Tim. Just asking a few extra questions because it was pretty remarkable. We talk about the VIX, and we're ending in the year on the lowest level we've seen all year. So pretty remarkable. Yeah. I appreciate it, man. Please go on.
Yeah, so it's the only thing on a short-term basis here is this example right here. When the VIX gets stretched up too much or too low, and we're kind of getting above the upper Bollinger Band right there, that tells me this is kind of a low volatility period right here, and that may be what's setting, and we may get slap in the face, but it's not a top of any consequence. So that'd be the only thing it's still bullish. You might see a minor pullback just because we're stretched to the pretty high level on a short-term basis to the VIX, and you might see a pullback, maybe next week or something. But I don't see any dire situation to get out of the market. It's a normal consolidation or an uptrend until the market starts making higher highs and VIX or the SPX VIX ratio makes lower highs are the times to worry, and we're not in one of those times yet. So to me, it looks bullish, though we may see a minor pullback here sometime, I don't know, a week or so. So that's the only thing I see.
I appreciate the breakdown. You got great ratios. That one's one of my favorite, though, because it's so simple, too, and it just makes so much sense, and it seems to work so well. So thanks for breaking it down, definitely.
All right. Let's kind of get momentum charts here. There's a lot of momentum, and gold issues are rallying to new highs and stuff, and I actually get people kind of worried about how far this rally can go to GDX. That's really a good sign when they don't worry, or times to worry. So, yeah. But momentum right now is kind of a king thing. There's a lot of things I can point out on the gold market. It's gone up too fast, too quick, and that may be true. But momentum rules. Until the momentum turns down, then it turns down, I guess. But I brought a couple of momentum charts on the. I could repeat on this chart. Your listeners are probably tired of hearing about this, but I think there's we're over 70 on this RSI on this XAU to NDX ratio. So next year, gold issues I bet outperform the NASDAQ issues. As long as this ratio or this RSI stays above 50, I think gold issues is the way to be. But at some point we're going to consolidate. Where's that consolidation going to start? Well, here's one indicator. This is the 50-day average of the up-down volume for GDX. So it's like 2.5 months of data. So it's kind of a slow-moving average. It measures the up, down, and volume and down volume for the components that are in GDX, because GDX is an ETF, exchange traded fund. And so I marked out in blue. This chart goes back to mid 2017. So it's quite a few years. Was that about 8 years or so? Works really well. So as long as this indicator on the bottom, which is the up-down volume, stays above zero, and the higher above zero, the more stronger that rally is. And we stayed above, 20 for, looks like September, October, November, and we fell back down a little bit, but we're coming in around close to 13 right now. So as long as this indicator stays above zero, the uptrend should continue. It doesn't try to catch the exact top because it's kind of a lagging indicator, but not too bad. It gets close to the tops. This is probably a little bit late, maybe a week after the top, but it nails the tops pretty well. And so so GDX is still pushing higher here, and this indicator is holding well above zero, plus 12. So how long can that last? I don't know. We got the signal to go long back in early 2025. So I don't know, it looks like about January of 2025. This indicator was made on a buy signal. It kind of had some ups and downs and some consolidations along the way, but nothing major. Even this decline we had from 85 to 70 didn't really affect this indicator a whole lot. So it doesn't try to pick out. It only picks out large declines. I'll put it that way. And
what's crazy is that pullback was literally almost just 1 week, right, among a year, where it's just. I was pulling up the GDX when you're talking about, because that acceleration is something else when you're looking at that on the most recent one we had. And that GDX, it went from about 50 up to almost 85. So 70% it was up over three months, something like that. And then you get that little pullback, and then we go straight back up to 90. Yeah, remarkable strength.
Yeah, it is remarkable. Matter of fact, look how high this indicator got. It got up to almost 35. Last time it come in, we were close. That was about, I don't know, looks like about 27. So it was a lot of strength in the gold issues, and so everything that's gold related is probably going to start moving up, and it's still positive right now. So this indicator can get you out close to the top, but if we get below zero, it's really kind of worrisome. And so far, that hasn't happened yet. So are we long GDX? Yeah, I thought we might find resistance to 85, which is the previous highs we had. I thought that's where we're going to go, and we're going to go flip sideways. And so far, we're not. So
not yet, right? Not even close.
Yeah, not
right?
yet.
Every day I wake up, I said again. I see the headlines, all-time high. I say that yesterday's headline? No, that's a new one. It's happening again. I know.
Right. So it's kind of took me a while to get. To me, the rules were plan and submit when I got into this business or not, but anyhow, this indicator is kind of a bigger view. It's a longer term view. So this is a shorter term view. This measures all the wiggles out of the market. So we had what it is, it's a cumulative advanced decline for GDX, and this is up down volume for GDX, a cumulative. So it's a little bit different look at how the data is calculated, I guess you might say, and it works really well as long as this. And I got Bollinger Bands on all the top windows of GDX, so you can see what's going on. But as long as this indicator stays above the mid Bollinger Band, which is the green area here, and when it's below the mid Bollinger Band, those indicators are below the mid Bollinger Band, which is here and here, you got short-term uptrends, short-term downtrends, and this indicator didn't give a sell signal on that pullback from 85 to 70, wherever it was. It pretty much stayed strong, and right now we're still making higher highs, higher lows. Still higher highs, higher lows. So until it goes below the mid Bollinger Band, last time we got a signal, it looked like the first part of November, and it stayed a sell signal until looks like about January, mid-January or something. So you were out of market for about 2 months. I can't quite tell how much the market went down, but maybe 10 points, 50, I don't know. But kind of hard to tell. But it's this indicator on a short-term basis is still bullish. So I'm holding along GDX.
I like those numbers, man. Those Bollinger Bands. I mean, hey, can't argue with the numbers. Look at that chart. Tim, appreciate the education, the time as always, man. Appreciate all the help. I hope you have a great Christmas with your family, and we look forward to talking to you next week, man.
All right. Merry Christmas. And
Merry
your
Christmas.
listeners.
Thanks again, Tim. Check it out, folks. Ord-oracle.com, and check out those webinars under the services tab. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We jump around. Southwest under pressure today. Southwest down by 1.7% right now. And yeah, they've been facing some heat, but quite the acceleration. This year you chop around all the way until November 24th, and man, quite the acceleration. All right, look at this acceleration recently, and look at the volume. Okay, you got buying all the way up to this last high on December 11th on Southwest. That was the real volume, and that brings you all the way up to 41.14. We're at 41.52 right now. All right, we got to jump to metals. $2,300 on the dot. How about it, man? An ounce of platinum, $2,300. An ounce of gold, $4,500. You add them both together, you got almost $7,000. Whoo! And silver, pushing 71.60 right now. We jump over to the dollar. Yeah, under 98. Dollar at 97.95 right now. We check back in on yields. On the day we get a strong GDP print, we almost got it all back. Look how little volatility we've had since noon. Like no movement at all. Look at some of these bars. 15-minute bars. No movement whatsoever on the 10-year. Take a look at the heat map in this market. NVIDIA, how about it, man? We're back to 4.6 trillion on NVIDIA, up 2.8%. Google up by 1.5% right now. We got a lot of these information technology stocks in the red, though. Look at this, right? The biggest ones out there are green. Almost everything else in this bunch is red. Look at it, right? Oracle, Palantir, Salesforce, AppLovin, Intuit, ServiceNow, Adobe, all of these, Synopsys. All of them in the red, and then Staples as well. Walmart, down by 1.5%. All right, folks, we got golds up $4,520. Still time to check out the gold report, folks. Put out a full update yesterday. No, this morning. Is today Tuesday? Oh, man, today is flying. I put out the full report out this morning, a video update yesterday. Folks, thanks so much. We got a half day in the market tomorrow, but we will be live until noon tomorrow. So I'll see you at 9 o'clock on the morning market kickoff on Christmas Eve. Ho, ho, ho. We'll see